Guys, today we're going to talk about the elephant in the room for the US housing market. BlackRock and other Wall Street companies swooping in and buying up homes out from under the noses of regular Americans who are already struggling to afford them. After all, here we are in mid-2021. Home prices in America have never been higher relative to inflation, wages, and rents. And so things are already really unaffordable. Things are already really problematic if you're trying to buy a home. The last thing we need is Wall Street corporations swooping in and buying up the remaining inventory. So what I'm going to do in this video is bring some data and sensibility to this argument and this narrative. We're actually going to look at what the data is saying about how much companies like BlackRock and other Wall Street firms own. The good news is these companies are actually publicly traded companies on the stock exchange, which means that they are required to report what their real estate holdings are to the SEC. So I'm going to be digging into that data for you guys in this video, and you're going to see, number one, just how much of the US housing market these Wall Street companies own. Number two, how much their ownership share is increasing in recent years and how worried you need to be if you're a home buyer about these companies. And then number three, I'm actually going to reveal what the number one real estate investor growth segment is in America. There's one investor that's actually dominating the market more than anyone else, and I'm going to reveal who they are at the end of this video. Stay tuned. It's actually a very surprising conclusion. All right, guys, let's get into the data. So if you guys want a proper understanding of Wall Street's ownership and control over the US housing market, we actually need to go back in time a little bit. We need to go back to 2012, because that was the first year where Wall Street actually got actively involved in owning single-family homes in America. Before 2012, it just wasn't really a thing. It didn't happen. But an interesting series of events took place to cause this. So in 2007, the housing bubble, the massive housing bubble in America in 2007 started collapsing, and it didn't bottom out until 2012. And along the way, we had tons and tons of foreclosures. We had huge surges of inventory, and prices just collapsed by 25% across the country and by 50 to 60% in certain markets. And it was at this point when a bunch of people on Wall Street in 2011, 2012 said to themselves, hey, this is a buying opportunity. So a bunch of companies got together and started buying US real estate assets, especially single-family homes. Some of them were BlackRock, another was Invitation Homes, another was American Homes for Rent. And these companies started buying up cheap single-family homes at discount prices and then turning around and renting them out to Americans for cash flow. And we actually need to start our conversation with Invitation Homes and American Homes for Rent. We're going to talk about BlackRock a little later, so stick around for that. But Invitation Homes and American Homes for Rent, these are actually the two biggest single-family homeowners in America today. They started buying up in 2012, and today in 2021, they are still the biggest owners of single-family homes. These are two REITs. They're publicly traded real estate investment trusts. You can actually invest in these companies in the stock market if you wanted to. I'm not suggesting you do that, but they're publicly traded companies. And what's great about that is they actually have to report all of their data related to, the amount of housing units they own, how much the value of their homes are, to the SEC. Every single quarter and every single year. So we're going to start with by looking at how many homes do Invitation Homes and American Homes for Life own, right? And how is that changing over time? So guys, what we're looking at on this graph are the home ownership totals for Invitation Homes in green and American Homes for Rent in blue. Again, these are the two biggest single-family home owners and landlords in America. There's no one bigger than these two companies. And we're looking at basically through the first quarter of 2021, Invitation Homes owned 80,000 units. American Homes for Rent owned 53,000 units. So in total, 133,000 units between these two companies in 2021. This is data that you could actually look up for yourself. These companies are publicly traded. They report all of this information to the SEC in quarterly and annual filings. Now, what I think is interesting, 133,000 homes between them. Is that a lot? Is that a little? Well, when you consider that there's over 80 million single-family homes in America, the portfolio of these two companies accounts for roughly 0.15% of the U.S. housing market. So these two companies account for about 0.15% of the U.S. housing market. About 1 in 750 homes is owned by the two biggest landlords in America. Now, the other interesting thing on this graph I want to point you to is the stability in their home ownership portfolios. We can see that basically the amount of homes that these companies own today is about the same as what they owned in 2016. And that's a really, really interesting point that I'm going to touch upon more in a second. So this data is looking at their portfolios nationally across America. The interesting thing is that there is a very uneven distribution about where these companies own. It's not as if they own in all 50 states. In fact, it's quite the opposite. They own no units in most states, but then in certain ones, particularly in the Southeast and Southwest, that's where most of their portfolio is concentrated, because when they acquired their portfolio, these were the states and cities in 2012 that had the biggest housing busts and had the cheapest real estate. So these companies came in and acquired in places like Florida and Georgia and Arizona and Nevada. And these are the places where, on a relative basis, these REITs and these Wall Street investors have the biggest ownership of the U.S. housing market. And you can see that represented on this map, where we're looking at two data points here. One is the percentage of homes owned in the state by these REITs, and I also added a third REIT to this total, which is called First Front Yard Residential. So we're looking at the total ownership of 3 REITs here as a percentage of all the homes in different states. So you can see here, Georgia actually comes out number 1. The REITs own about 22,000 housing units, single-family homes in Georgia. There's 2.5 million homeowners. So that's about 0.86% of Georgia's housing market is owned by these REITs. That's the highest relative share in America. If you guys are enjoying the data in this video, please hit that like button. I love sharing this data with you guys. I spend a lot of time putting it together. If you just hit that like button, it really helps me get more exposure and actually helps me devote more time to putting these videos together. Additionally, make sure to comment. I want to hear what your thoughts and opinions are on the housing market, and specifically, what are your experiences right now as a buyer or renter? When you guys comment, it makes these videos better. All right, let's get back to it. Other states with a fairly high relative share are Florida, 33,000 REIT units compared to 5.5 million homes, 0.6%. Arizona, where there's 11,000 REIT-owned units compared to 1.8 million homes. And then Nevada, where there's 4,000 REIT-owned units compared to 672,000 homes, so 0.6%. It's really these 4 states, as well as maybe North Carolina, where most of the ownership is. And what you can see actually is that we have donuts. We have zeros in most states. Like, these companies don't own anywhere in the Northeast. They don't really own anywhere in the Midwest or the Plain States. It's just really these kind of concentrated pockets in the Southeast and Southwest. So in Georgia, which is the state where these REITs own the most homes, they own 0.9% of the housing market. They own about 1 out of every 100 homes in Georgia. They own about 1 out of every 200 homes in places like Arizona and Florida. And in most states, they don't own any homes. So guys, on a percentage basis, Invitation Homes and American Homes for Rent, which are the 2 biggest landlords in the U.S., they're bigger than BlackRock, they own a very small share of the U.S. housing market. It's important to understand this point. We're going to start to see how this narrative about Wall Street ownership really isn't stacking up when you look at the data. The percentage ownership is really, really low. And if they are having an impact on the housing market, it's only really in certain states, and it's a small impact at that. But guys, I don't even think that's the most interesting conclusion to draw from this, is the overall percentage ownership. I think what's even more interesting is looking at the changes in ownership, right? Or I should say the lack thereof of changes in ownership, and the fact that Invitation Homes and American Homes for Life, the 2 biggest landlords in America, the 2 biggest owners of single-family homes, are not buying homes right now. That's right, they're not buying homes. Their aggregate portfolios, the total units, are the same today that they were 5 years ago. And that's what really flies in the face of this narrative, is not only do they own a small percentage of the U.S. housing market, the percentage of the market they own is actually the same or declining. And you can see, guys, what I'm talking about on this graph, where we're looking at the total combined portfolio of Invitation and American Homes for Life, and then we're looking at it as a percentage of all the housing units in America. So we can see here in 2017, these 2 REITs owned 133,000 homes compared to 77 million across America. Today, they own 133,000 homes compared to 83 million homes in America. So as a percentage of total homes in America, these REITs actually own slightly less today in 2021 than they did in 2017. And this is really like where I'm starting to scratch my head. Why are the two biggest homeowners in America not buying homes right now? This is something that's like really perplexing me a little bit, because if you think about, what the narrative is saying about the housing market, people are saying, oh my God, the housing market's never been better. Oh my God, we're going to have continued appreciation. Yet Invitation Homes and American Homes for Life are not buying. And this is so curious, guys, because these companies are massive, massive companies that are set up logistically to be able to buy homes. I mean, Invitation Homes has a market cap of $20 billion. American Homes for Rent has a market cap of $12 billion. These are massive companies with thousands of employees and lots of capital. They're publicly traded companies that issue equity. They have the cash if they want to go and buy homes, but they're not buying homes right now. And this has got to make you a little bit nervous if you're a home buyer or a real estate investor looking to buy in 2021, that the big dogs, the biggest owners in America, are sitting out right now. They're not participating. And this flies in the face of everything you're hearing in the mainstream financial press, most real estate YouTubers. Everyone's trying to say, oh, we're still going to have crazy appreciation. The market's still frothy. It's going to keep going. It's going to keep going. But the two biggest homeowners in America aren't buying it. Interesting. So that brings us to BlackRock. What's BlackRock's role in all of this? If, the big REITs, the biggest homeowners in America aren't buying, well, is BlackRock buying? Because that's what the narrative seems to be saying. And once again, I look to the 10K SEC filings to get hard data actually on just how much real estate BlackRock owns, right? What is that dollar amount? And how does it compare to the value of the US housing market? So on this graph, the green line is the total value in trillions of dollars of the US housing market. So here in 2021, the housing market through the first quarter peaked at 34 trillion in value. Absolutely absurd. Hard to even comprehend of what 34 trillion is. But that's the total value of the US housing market. And that's actually even higher than it was in 2006 before the last crash. Now, this blue line, which is just basically lying flat along the x-axis, is BlackRock's real estate assets under management. Their total amount of real estate that they're either invested in or they are managing on behalf of their clients. And that total in 2021 is $25 billion. $25 billion sounds like a lot on its own, but you can see that in comparison to the value of the US housing market, it is absolutely nothing. It is peanuts. In fact, BlackRock, assuming that all of this real estate is in the US and is in single-family homes, which I can almost guarantee you it's not, but assuming all of it is, they would own about 0.07% of the US housing market in 2021. What's interesting is that, like the REITs, right, we're not seeing an increase really in the ownership. In 2020, BlackRock's ownership was 24 billion. In 2019, it was also 24 billion. Back in 2013, it was 23 billion. Which was actually BlackRock's highest relative ownership of the housing market. It was around 0.13% of total home value in 2013. So we're seeing the exact same situation with BlackRock that we just saw with Invitation Homes and American Homes for Life. We're seeing a low overall ownership of real estate compared to the US housing market. And we're seeing that ownership either stagnate or decline over the last 5 to 7 years. So guys, in case you're not getting the picture yet, the narrative about BlackRock and Wall Street coming in and taking over the US housing market is complete and utter crap. There is no truth to it whatsoever when you look at the data, which is publicly available for all of you to look at based on SEC filings. There's no truth to this narrative. Not only do these companies own a minuscule share of the US housing market to start, that share is shrinking, right? As we said, Invitation and American Homes, they're not buying new homes. BlackRock, they're not expanding their real estate portfolio right now. So if these big Wall Street companies aren't doing it, who is? Well, guys, there is one investor that is coming in and buying up a lot of homes in the housing market and causing prices to appreciate. No, it's not Wall Street. No, it's not BlackRock. It's you guys, the people watching this channel. All of the people who are trying to become landlords and real estate investors at the top of a housing market bubble, it's you guys that are actually causing this. And the data supports it. The biggest increase in investor home demand over the last 10 to 15 years is not coming from big companies. It's coming from amateur mom and pop investors who only own a handful of companies. That is what is stimulating this housing bubble. Not big corporate America, small time investors who, like I've talked about before, I call it the HGTVification, wow, say that 3 times fast, of America. People watch HGTV. They go on biggerpockets.com and they have $30,000 in the bank. All of a sudden, they're a real estate investor. Let's look at the data. So on this graph, which was put together by CoreLogic, they show basically the percentage of investor demand coming from different segments over the last 20 years. And the red line is investor demand coming from people that own, or companies that own 1 to 10 properties. What you can see, that this red line, which is that mom and pop, small time investor, that has always been the number one source of investor demand. It has always been small time investors, right? Throughout the course of this period. But we can see since 2013, that share has increased from about 47% of the investor demand to over 60% in 2018. Unfortunately, we don't have data on the last couple of years, but I suspect that it's gone up even higher, the small-time investor share. At the same time, we can see that this gray line, which represents investors who own over 100 properties, their share peaked in 2013 at about 25% of the market. That is consistent with what we just saw with BlackRock, right? That was actually when BlackRock had their highest relative share, was 2013, after the last housing crash. However, their ownership share has dwindled since then from 25% to 17%. So guys, very clearly, it is small-time investors who are dominating this housing market right now. And how ironic is this, right? That the narrative that has caught everyone's attention is the one that blames Wall Street, right, for the housing crisis. But it's actually the small-time investor that's causing it. Pretty crazy when you think about it, very ironic. And I gotta say, guys, this is consistent with what I'm seeing from where I sit, right? Like, I run a data consulting company to help people use data to figure out which cities to invest in. And I get into my email inbox, like every week, 50 new emails from people who say something on the order of, I have $20,000 to $50,000 in the bank that I wanna invest into a real estate asset for, investment, passive income, things like that. All of these small-time investors are piling into the real estate market at once. And guys, let me tell you, that is bubble 101. When small-time retail investors start really piling into the market, as they've been doing over the last couple of years, pushing prices up, that is a signal that you're in a bubble, and it's a signal that the bubble is going to come crashing down, especially when those small-time investors are not being followed by the institutional investors. Like, as we looked at, Invitation Homes, American Homes, BlackRock, sitting on the sidelines of the real estate market right now. They're sitting on the sidelines when they already own their portfolios, and they're watching you, the retail investor, bid up the price of their portfolio. Now, that's not to say you shouldn't buy an investment property right now. I think there are certain markets and locations that could work even at the peak of a bubble. But guys, if you're, just have some savings and you're going to start investing in real estate, you need to be really careful right now, because you are buying into the peak of a bubble. Prices have never been more expensive, right? So you need to use data. You need to make sure you know what you're getting into in terms of where and when you're going to invest. Because let me tell you, we've seen this story play out before, 06, 07, 08, 09. A lot of homeowners and small-time investors lost everything. It was then afterwards that Wall Street came in and bought things up at cheap prices. And I suspect the same thing is going to happen again. If you guys enjoy the data in this video, all I ask you is please hit that like button. I spend a lot of time putting this data together and sharing it with you. In return, just hit that like button. It helps me get some more exposure, helps me actually put more of this content together. Also, make sure to comment. I want to hear what your experiences are in the housing market. What are you seeing as a buyer or renter? When you guys comment, it makes these videos better. Additionally, make sure to subscribe. On Wednesday, we're going to be dropping a market deep dive video on Tampa, Florida. This has been one of the most requested market deep dives yet, so you're not going to want to miss that. Subscribe. We got Tampa, Florida coming on Wednesday. Until then, this is Nick from ReVenture Consulting signing off.